Hello and welcome. Primarily a cash economy, India has been adopting digital payments at a rate like never before. The industry is booming. The size of India's digital payments market is likely to grow more than threefold from $3 trillion at present to $10 trillion by 2026, as per a report by PhonePe and the Boston Consulting Group. While the growth has been rapid, the industry is still nascent. There are concerns over several structural and technological challenges such as cyber frauds, transaction costs, communication infrastructure, awareness, and adoption to actually bring about the true realization of the potential of digital payments. I'm Miloni Bhatt, and who better to tell us about the road ahead for digital payments than Upasana Taku, COO and co-founder of MobiKwik. Founded in 2009, MobiKwik defines itself as a fintech company providing payment solutions through mobile wallets and the BNPL channel. Upasana, thank you so very much for your time today.
Thank you. Thank you so much for having me here. It's a pleasure.
All right. MobiKwik today is one of the country's largest BNPL provider. Can you tell us about the opportunity for buy now, pay later to change the face of the credit market, especially in a country like India, and, to kind of bring about a digital financial revolution, not just confined to urban metros, but also something that percolates down in tier 2 and tier 3 cities and towns?
Yeah, so see, I think first we must understand the context that we operate in, which is a country, India, 1.3 billion people, about 800 million bank accounts and debit cards in play, but only 35 million credit cards, and less than 70 million Indians have ever had access to credit. So we are now a banked market, but if I could say that we are well banked for the top 100 to 150 million Indians. And for the others, banking just means having a savings account and a debit/ATM card. And so therefore, the opportunity for the entire financial services spectrum to get disrupted and rather to reach people and small businesses is very large. The TAM, or the total addressable market, is especially large because, like I mentioned, whether it is people who have invested in India, whether it is people who have taken a loan in India, or whether it is people who are insured in India, all those numbers are in the range of 3 to 5% of the entire population. And so therefore, firstly, there's a lot of room for different financial players, banks, fintech companies, etc., to create opportunity. Now, when you spoke about bringing credit, and that's where I want to say that, buy now, pay later, as is understood globally, is very different from the buy now, pay later that has been created by a few fintech companies in India. Because in the global markets, buy now, pay later is an alternative to credit cards. It's a more convenient, smaller duration, very transparent price product available for, disposable income spends. In India, that's not the case. Like I just explained, most Indians don't have even a credit card. And so they're spending with their own hard-earned money sitting in their bank account or their debit card. And essentially a pay later type of product is bringing them their first experience of credit. And the reason, why it can have is having a strong impact is because generally a pay later product is for daily life purchases in India. It's not to buy an expensive purse or expensive clothes or something like that. It is more for daily life uses, whether you want to buy food, groceries, use it for daily transportation, pay bills, etc. And it allows many Indians to get access to credit for the first time, because from a lender's perspective also, it's a fairly small ticket product and the tenure is also small. So it's a good stepping stone to credit test a lot of users very quickly. And of course, for a company like MobiKwik, we started with a large foundation of a payments business where we have about 125 million users and 3.6 million merchants on our platform. And after creating the payment services for them, 4 years back, we wanted to kickstart our financial services journey. And that's where, we started with a very small ticket, 15-day pay later product, which we have now offered to 30 million of our users. But most certainly, this is part of the journey and definitely not the end game. The idea is really to test users via pay later. Then we have already started building on that by offering them EMI loans to buy, a large ticket product or service. And then in addition to that, we will bring them personal loan, deposit products, insurance products, the works. The idea is really to bring the full spectrum of financial services to our users as well as our small merchants, because both of them, have come to our platform for payments, but we have the opportunity to bring all these financial products to them in a very simple manner, on our digital apps. So that's sort of what we are trying to do.
There's been a lot of regulatory pressure and scrutiny, right, on these products. What are the challenges for you now that you're in the space? And, also the whole thing about balancing innovation while ensuring the guardrails that the central bank deems necessary to ensure customer safety.
No, absolutely. See, I think one thing we have always been very, clear about is that, there are all kinds of markets in the world. There are fully open markets. There are completely closed markets. India is a market where financial services has always been well regulated and it continues to be regulated. So unlike, how some people are saying, I don't think the government or the central bank in India is opposed to innovation. I think they are pro-business, they are pro-innovation, but they're always looking out for consumer protection. And like you said, they want to make sure that the guardrails are set up, right from the beginning, so that while innovation is happening at a very fast pace, as you might know, fintech India is the third largest fintech market globally now. So there are lots of companies, there's a lot of fragmentation, a lot of opportunity also, even now. And so lots of companies are trying to solve different problems coming from different angles, different niches. And I think what the government is trying to do, or the central bank is trying to do, is to make sure that we have a common minimum sort of rule book that we play with. I think that last 10 years also a lot of fintech growth has happened in India. And I think now the regulatory mode is more like, yes, we want you guys to grow. We want you guys to scale fast, bring disruption. But at the same time, we want you guys to, work like mature companies and understand that, you are in the money business. And this is a important business. Nobody likes to lose money for a customer. So I think that, there are several licenses that are available for one to build a truly strong digital financial services business, starting with the wallet license. Then we have an insurance distribution license. We have a investment advisory license. And, whether it is for doing credit businesses also in the country, there are NBFC, small finance bank, etc. licenses available. So I think that the right players will do all that is required, to make sure that the business is protected from regulatory overhang, and at the same time, a rule book, that the government has laid out. In many ways, I think it's a very interesting DNA that one needs to succeed in fintech in India. I often joke about it, but the clear analogy in my mind is not only does one need to be, from an entrepreneur or leadership team perspective, super strong on product and tech innovation, but also you need to be really strong on compliance and the regulatory landscape. So in a way, fintech founders in India need to be half parts Zuckerberg-like and half parts, Mr. Kotak-like, to get the equation right.
Is it a real challenge?
It is extremely. I mean, like in anything, you want to find somebody that is an expert in one thing. It is always easier to find. If you want to find somebody who's an expert at two things or three things, the pool of people who are able to balance that tightrope, is really small.
Does that mean, that fintech founders, with the kind of regulatory environment and atmosphere that we have, are now having to second guess, recheck, doubt before moving ahead?
No, I think there's no question of second guessing and rechecking. See, I think it's very clear as to where we are today and it is also evident based on the noise that you hear or the draft papers that come around, that what's going to come in the future. So it's not as if you have to second guess, but yeah, I think one has to, if one is going to have a right to win, then one must be ready, with their chess moves, a few steps ahead of where things are in reality. So it's not very difficult. Like I said, that it is easy to understand, what kind of licenses gives one the ability to build any and all products and services that one likes. One just needs to make sure that we make investments on the regulatory side also in ensuring that we have all the licenses and all the umbrella licenses that can protect us from any further knee-jerk notifications that may come around. So I think the stress or the focus in most fintech companies is always on scaling, growth, and whatever is their target, whether it is consumers or merchants. I think that now they will have to make sure that there is more focus on regulatory compliance as well.
And you don't see it as a bad thing necessarily. India, as you said, is set to be one of the biggest fintech opportunities and markets. What are the top 3 trends that you see in the digital payment space taking off perhaps in the next decade?
So see, I think that the first thing is that payments has and continues to be sort of the bedrock. So when you think about the whole Digital India mission, what Modi ji talks about, whenever people are getting digitized, they're getting smartphones, the first thing they start with is content. And then when it comes to money, they start with doing one bill payment or one P2P transaction or one QR code based payment. That's sort of how most Indians are starting their digital payments journey. Payments becomes the bedrock. And I think right after that is where, people have started now thinking and focusing on very clearly that can we bring credit products to consumers as well as small businesses? Can we enable them to also, if they have excess cash flow, is there a way for them to earn stronger returns, from their excess cash? I think that getting more and more people to invest money in short-term products where there is strong liquidity, I think that is becoming one opportunity. We see a lot of companies that are, either trying to get people to invest into mutual funds or deposits or stock market. So I think that is one area that there's a lot happening. Credit, of course, is the flavor of the year, and maybe for the next 5 years, we'll continue to see a lot of action in the credit side, most in all cases. I mean, whether it is credit for a particular use case, whether it is for working capital or merchant advance products for the small businesses, whether it is a term loan or personal loan products for individuals, especially self-employed individuals, because India is mostly self-employed, and there's a huge gap in terms of demand and supply there. Then if you also think about InsurTech, I think that is also coming up in a big way. I think there are a lot of opportunities there. The traditional distribution model, has always been focused on, the top 50 to top 100 million Indians, where their earnings are higher. And so the insurance premium that they will buy will be in thousands, of rupees. And the loans that they will take will be in lakhs of rupees. But interestingly, 90% of India, in terms of their earnings, are falling. Per capita, we earn, less than $600, $700 per month. So therefore, most of India actually needs, whether it is investment SIP products, whether it is insurance products, or whether it is credit products, everything needs to be in sachet sizes, smaller sizes.
Smaller.
So like somebody wants a 1 lakh rupee insurance policy, the premium that they can afford is 100, 200 rupees. And if you see, most insurance players and large insurance platforms, they're all focusing on higher ticket products. Because that's where, they are able to make better margins, and the cost of user acquisition is not a big challenge for them. So therefore, I think the main disruption that is going to come in all of these legs. I think that deposit taking, credit and insurance. We have seen a lot of action in credit in the last few years. I think insurance and investment products also will start see extremely strong interaction coming from fintech players rather than incumbent financial institutions. And I strongly believe in the concept of collaboration and partnership. I think most of this will come in partnership with bank entities, large insurance companies, where they will be the OEMs. But I think a lot of the distribution plays will come by virtue of these large licensed entities partnering with the right fintech partners.
Okay. Now I want to focus on payments. My vegetable vendor, my green grocer, everyone, I mean, they all accept digital payments, right? But in India's villages, there is still some sort of a reluctance. Could be about the lack of awareness of how payments work. But another issue is dispute redressal, which could be consuming dispute redressal, right? So there could be issues of internet connectivity. How do you see those being tackled and, being the stumbling blocks for us when it comes to payments?
No, you're absolutely right. And I think before I address your point about consumer redressal, I think it's more about consumer education and awareness. So again, as a country, even today, only 250 million Indians, 250 to 300 million Indians today are transacting using, apps on their smartphone. And so there's a lot of, opportunity, and every day, more and more people are starting to transact digitally. And actually, I want to tell you that stronger growth for platforms like ours, not only on the payment side, but also on the credit and financial services side, is coming from the tier 2, 3, and 4 cities and towns of the country. Why? Because, in these places, the access to specific products and services are more via e-commerce, because physically many products and services are still not available in smaller cities. And so these people are more keenly adopting digital. And I don't think that internet is a big challenge. I mean, I think Jio and Airtel and all the telcos have done a great job. I think in many, many remote parts of the country, you're able to get very strong, internet connections. We see that on our platform. We are doing now our credit products in more than 300, cities and towns of the country. So I'm seeing lots of smaller cities give, much stronger adoption, where more and more users are actually repeatedly using the app. And not only are they making bill payments, but they're also doing a lot of e-commerce purchases, and they're also showing interest in using the credit products as well as the insurance products. So I think that a lot more of the growth opportunities will come from these, less from the metros and more from the smaller cities and towns. And so we are very excited, about that, because that's really the impact story. I mean, that is sort of the reason that we started MobiKwik, to really get financial products to reach the masses of the country. Now, when it comes to trust and dispute resolution, and I think there are two challenges there. One is that most of consumer internet in India, e-commerce companies, payment platforms, everything is in English.
Yeah.
We have not yet localized to several regional languages, and because there's a huge cost associated with it. And until now, last 5-10 years, stronger growth was coming from metro cities, where of course English adoption is extremely high. So that's one. So I think because many Indians are latching on to digital systems for the first time, their awareness and education of how things work, is still behind the curve. I mean, we receive many queries where people are like, I'm not able to complete the payment. It says, put your one-time password. What is a one-time password? Where do I get my OTP? So see, I think some of these are real questions. These are commonsensical questions. But I'm just saying that level of overall consumer education is not very strong in our ecosystem, because most of India was running on cash for so long. So I think, the government, banks, etc., have to help the economy, and maybe we have to spend a little bit more on educating our users. So I think that's happening. That there's a challenge between people interpreting that how things work. And then you rightfully said grievance redressal and dispute resolution is also a challenge, because we have lots of players in the ecosystem, both on the e-commerce as well as on the payment side. So while there are some large platforms, both for e-commerce and payments, there are also lots of small players. And many of these people are not spending enough in terms of their FAQs, customer education, customer support policies, and it's creating more chaos, so to speak. In fact, we all talk about how UPI is now, we are one of the fastest growing nations in terms of digital payments thanks to adoption of UPI. But you will be fairly shocked to know that, let's say you make a UPI payment to a vendor, and if the vendor says, I've not received the payment, but you see that the money is debited from your bank account, you try to contact your financial institution to get this transaction either completed or refunded. It's a nightmare. And that's just because the sheer volume of the transactions is so high, and most of the banking platforms, they have not prepared any sort of digital intervention systems or support systems to help them manage this. So calling a call center, like if at any given moment of time there are like thousands of such transactions failing or in disputed state, it's not going to be possible to support grievance redressal for them, using manual call center operations, etc. It has to be digitized, and I think is again one big opportunity where users are finding themselves a little disadvantaged right now. But I'm sure that in time, more and more automated systems will get built, so that in such cases there is automated notification that in few hours this transaction will update, and don't worry, and either the transaction will go through or the money will get refunded. So some of these things, and especially with some of our older cooperative or even PSU owned banks, I think there's a lot of opportunity for more digitization to make access to this transaction information sort of more real time.
There is this other area of concern, which is privacy. Various parties in the payment chain can track an electronic purchase. The information could be used to profile, marketing purposes, can be shared also. How do we then balance, say, commercial interest with the privacy of the consumer?
So see, I don't think we have yet a data protection bill that has been ironed out, but I'm sure it will come out in time. But I think until such time, we have seen that there has been a lot of change in the last 4-5 years also. Like I remember few years ago, even a gaming app or would track a lot of information about the user just from their app on the user's phone. And as opposed to now, thanks to the government's focus on it, and also Google Play Store, etc., have strengthened their policies. So I think this is also one of those tightropes where there will always be people who are interested in consumer protection, but I think some of those people I've seen the last few years also. I think it's a balance. So we can't be so conservative to the extent that we are trying to be woke about consumer privacy, consumer protection, because what is more important for somebody who earns 1 lakh rupees per month and lives in a metro city may be very different for somebody who earns 25,000 rupees and lives in a smaller town or city in India. And so the case in point I'm trying to make is that few years ago, all of us were used to using the Aadhaar APIs for KYC verification.
Yes.
And then few years ago, there was an uproar and, it was in Supreme Court, etc. And except banks, nobody could use Aadhaar. Now, I don't know whether, that was helpful or not, because for many people, they are not able to get so many products and services in their life just because they're not able to complete their KYC and police verification and all of ID verification processes. So a centralized API, which allows them to readily identify themselves to any service provider who can provide them a product or service if their identity is verified, I think it's an excellent use of technology. Were there some entities who misused it? Of course they were, but the answer to that is not that. I'm just giving this as an example. The answer to that problem is not to completely abolish the use of digitized products or services and telling everybody now go back to paper. Now with every application, submit your PAN photocopy, Aadhaar photocopy, some other XYZ things to prove your identity and everything. When we have built API based services, we must use them. They bring efficiency. The right tools to implement at that time would have been to have hefty fines and penalties or to entities who are misusing it. I mean, the penalties can be as huge as tens of crores if there were entities that were abusing it. But I think that this is one example where I think we need to have a balanced view, because we need to understand that we have still many people who are not literate in this country. We are people who are literate but are only equipped with Hindi or native language processes and are not able to do things efficiently for themselves because of the English barrier. So I think to that extent, if identity verification services, etc., even credit assessment facilities. So there is no difference between a user furnishing photocopies of their salary slips, of their bank statements, or giving access to their recent last 3 months bank statements from their bank account itself. Whatever is convenient for the user should have the right to choose. So my thoughts on this is that the user should have control, the guardrails need to be strong, and the entities who abuse it need to be thoroughly and heavily fined.
Okay. I have last two questions for you. One is about the larger scenario, given the inflation world over, the possibility of recessionary scenarios in US and Europe, markets which are falling, lackluster listing of certain startups in India. How do you see the environment shape up in the next 6 to 12 months? And how does this impact your plans for listing?
No, so I think I'll not beat around the bush. I think that, like you rightfully said, globally, stock markets, capital markets are not in a great shape. They're volatile, and even listed companies who have a strong track record of profitability for years and years right now are taking a beating in terms of their valuation. So it's definitely not a conducive market for anyone to get listed, not in India and not in US, not in any major market per se. But I think that's okay. I think markets turn. I mean, we had a very strong bull run going on last year, and I think this is the year from that we have come to a place where everybody's being very cautious. I think this will probably continue for a few more months or quarters, but turnaround will come. The markets cannot be low forever. That's the whole point of a market which is driven by what's happening in the macro. So I think that good companies have a strong opportunity right now to capitalize on this time, build out their businesses, grow very nicely, strengthen their business, show scale, and also be profitable and show quarter over quarter profitable growth. And I think with all of these things in hand, as soon as the markets are back, whether it is in 6 to 12 months, we will see. But as soon as the markets are back, there's no reason why strong companies showing good financial performance should not be able to come to the market and get a warm, reception.
And so that's your horizon for MobiKwik as well? 6 to 12 months?
So I mean, as you know, MobiKwik is very much on the IPO track. And, in order to IPO, you need a good market, you need good financial performance, and you need the regulatory approval. So we, got the regulatory approval. We have that in hand, and once it runs through, we'll make sure that we have another renewed approval available. We are continuing on our growth journey and using this time to aggressively grow, while at the same time, making sure that we are a rare fintech in India that continues to be profitable. Last 2 quarters, December 21 and March 22 quarters, we have been profitable, and we intend to, continue our growth path in the same manner at the break-even profitable status. And yeah, I think we intend to be ready at all times, quarter over quarter, keeping ourselves, audited numbers in hand, so that as and when the market is, back, and when our, team of investment bankers advises us, we'll be back on the IPO track.
All right, and we wish you success there. My final question to you, you spoke about growing aggressively. Any new products that you're looking to launch, and especially growing, as you say, in tier 2 and 3 towns and cities?
Yeah, so see, we are continuously. I wish I could tell you about one product, because we are very much a app-driven company, and so we release new updates to our app every 15 days. I think right now, so last few years, like I said, consumer-facing credit products, whether it's a small ticket pay later product or whether it is an EMI product, have been our focus. Right now, we are very focused on introducing similar products on the small merchant side. So we also have 3.6 million merchants that accept payments via MobiKwik. And for many of them, we are now making a card product available, and we are also trying to bring our credit products, to them. Because most of these merchants are also, along the length and breadth of the country. And while they may not qualify for a credit product from a large bank or financial institution, based on their data with us or their receivables via us, as in, every day users are paying them and we settle them money, right? So based on their history of GMV that they are doing on our platform, we are able to underwrite and provide them in partnership with our partner banks. We are able to provide them credit products. So that's a big area of focus for us.
All right. We wish you continued success. Upasana Taku, thank you so very much for your time and for your thoughts today.
Thank you. Thank you so much. It's a pleasure and honor to be here.